In this video, I'm going to be looking at the book of prime entry, which is the cash book. Now, the cash book is used for numerous purposes. So the cash book begins with transactions. So that's the first element of the cash book. And transactions then create source documents, and then those source documents are then sent on to what is known as the books of prime entry. So the source documents are used for making entries in various books of prime entry. The session today will be focusing on just the cash book element, which is here. Now, when we talk about transactions come in various forms. But the transactions which go to the cash book, these are referred to as cash transactions. What do we mean by cash transactions? Cash transactions are those transactions for which payment is made immediately. Now, these transactions where payment is made immediately can be made in two main ways. They can be made using cash, or they can be used being processed through the bank. So cash transactions would involve pounds and pence, but your bank transactions can come in various ways. So, for example, payment using checks, payment using debit cards or credit cards, bank transfers, and even more modern payment methods such as PayPal, Apple Pay, all of those other methods. These are where payment is made immediately and the processing will actually go through the payee's bank. So a business that is going to be using the cash book, those transactions will generate what is known as source documents. So transactions could be buying goods, selling goods, paying for goods or services, so making a payment or receiving a payment. Those are examples of transactions, and each of those types of transactions will generate what is known as source documents. So from the list of source documents listed here, some of these source documents will then be used to make entries in the cash book. So for example, check counterfoils, paying in slips, cash receipts, till rolls, and the bank statement, which will have numerous records of different methods of payment. So for example, debit cards and direct debits and standing order and such the like. Those kinds of payments will actually manifest themselves or show up on the bank statement as evidence that this transaction has taken place. So the cash book is one of those books of prime entry which will host all of your cash transactions. So for example, if you had a credit transaction where payment is made at a later date, then the source documents will involve invoices and credit notes. All the other methods listed here will involve the cash book. So these are source documents which we will use for making entries in the cash book. Now, this is an example of what a cash book looks like. The cash book has two sides. Again, it still looks very much like a T account, where the main... So it still looks, you still have a left-hand side and a right-hand side. It looks very much like a T account. And the left-hand side is for all of the monies coming into the business. So that is money in. And the right-hand side has all of the monies going out of the business. So the left-hand side is money in, the right-hand side is money out. So we call the money in section, and I'm just going to, for money in, that is called receipts. Now this is a different receipt from a cash receipt. So it's where the business is receiving money. So it's for getting monies into the business. And the cash book, the debit side or the left-hand side, is the increasing side. So every time the business gets money, it would be recorded on the debit side. Every time the business spends money, which is the payment side, it would be entered on the credit side. So the credit side is for payments, which would cause a reduction or a decrease in cash or money at the bank. Now the cash book is really the bank account and the cash account brought together in a book. So side by side, the cash book actually serves two purposes. Serves two purposes. One, as a ledger account for cash and bank, but it also serves the purpose as a book of prime entry. So there's two purposes for it. So it will look a little bit different from the other journals which you might have been introduced to. So journals like this, the purchases journal or the sales journal, sales returns journal or the purchases returns journal. You'll recognize here that this is like a ledger for two accounts brought together in a book, and where side by side you can actually see the cash and the bank columns. So it's in a columnar form with cash and bank on both debit and credit side. On each side, there's also an additional column. So on the debit side, you'll see a discount allowed column, and on the credit side, you'll see a discount received column. Now, these columns are not part of the double entry. So these are not double entry. Their purpose is for a tally. So a tally or a record. They're just keeping a list. So it's just for listing all of the debits. So it's like a memorandum column. It keeps a list of all of your discounts which you're giving to your customers. So discount allowed is for discount given to customers. Your discount received, again, not double entry. It tallies discount received from your trade payables, who are your suppliers. So discount allowed is a tally. It does not form part of the double entry. Tally means you're creating just a list, okay? And what are you listing? It's discount given or allowed to customers. And so these do not form part of the double entry. What you'll see, however, is that your cash column and your bank column forms part of double entry. So on the debit side, there is a column for cash and a column for bank. On the credit side, there is a column for cash and a column for bank. However, if you look at discount allowed, it sits alone by itself on the debit side, and discount received sits alone by itself on the credit side, because it's not a direct debit and credit. It is only a memorandum or for a list of all discounts received, which is on from discount received from your trade payables or suppliers, and discount allowed with discount which you're giving to your trade receivables, or your customers. So this is just a layout of the cash book. You'll recognize that it looks very similar in the layout to a ledger account. It has a date column. It has a details column. It has a column for bank and a column for cash. So these are money columns. Okay, so any transaction that relates to direct cash would go in the cash column. If the transaction relates to the bank, then it goes into the bank column. So if you're getting money in and it is money into the bank, which will increase the balance at the bank, then that would be on the debit side, but it would be recorded in the bank column. On the credit side is the payment side. And again, you'll see a column for cash and a column for bank, in addition to date column and a details column. So any monies that the business is going to be paying out or money out of the business, then if it was money out of the business using cash, then the entry would be made in the cash column. So you'd enter the date of the transaction, the details, which is the corresponding account of the transaction, and then you would also put in the amount. So here it's money. So it's the amount of money that was paid, either in cash or through the banking process. So through the banking process might involve debit cards. It could involve direct debits. It could involve standing order. Okay, so all of those are methods. It could involve a check. So you have to read the question carefully to see how the payment was made and to see if it's going to affect your cash column or your bank column. Now, there are times when transactions will affect both the bank column and the cash column on each side. So let us look at an example. So example of a contra entry. So I'm just going to example. So let us say took £50 cash from till and deposited it at the bank. And let us just use a date. So let us say that we did that on October 1, 2024. Okay, so I'm just making a transaction here just to see what it would look like. Now, there are certain transactions which we call contra entry. So this is an example of a contra entry. How do I know that? This transaction is affecting two things. It is affecting cash. It is also affecting bank. So it's affecting both the bank column and the cash column for the transaction. So I'm taking money from the cash till. So it means that cash is going to go down, a reduction in cash. Cash is an asset. And if your asset reduces, that is going to be a credit entry. And you're going to put it in the bank. So money in the bank is going to increase. So you're going to have more money in the bank, and that is going to be a debit entry. So how would I record something like this in the cash book? So first it said on October 1. So I'd put in my date, October the 1st. I'm taking the money from cash. So it means I need to come to my cash column and I would enter 50. So because this column is saying cash, my details will have to say bank. And I'm going to lodge this money or deposit this money in the bank. So money at the bank on the debit side is going to increase. So October 1. Money at the bank is increasing by £50. Because that is the bank column, my detail here has to say cash. That's an example of a contra entry. And we usually put a little C next to it to remind yourself that this is a transaction that affects both sides of the cash book. So therefore, a contra entry contra entry affects both the cash and bank column of the cash book, and I'll just write CB. So cash and bank columns of the cash book, and it is called a contra entry. So remember that the cash book it serves two purposes. It's both ledger account for your bank and cash, and it serves as a book of prime entry for cash transactions. And remember, I explained cash transactions are those transactions for which money is paid immediately. So it can either be paid either in pounds and pence or through the banking system. So just to break this down a little bit more. So again, on this page, you can see the cash book, an example of the cash book and the layout of the cash book. And just to explain what the purposes are. So it serves a number of purposes. The cash book brings together the cash account and the bank account in the double entry system into one book. The cash book is used for these purposes. So cash transactions, all receipts in cash and most payments in cash, and bank transactions. So those transactions which go through the banks. So all receipts by check and bank transfers, all payments by check and bank transfers, and as we established earlier, any of those transactions which you're processing, which is through the bank. So the cash book is in a columnar format. The first few columns remain the same, but as if you were doing a ledger account, date, details, but then there for the money column where you'd put the amounts, there are two columns, one for cash and one for bank. These sit side by side. So your cash and bank column, they sit side by side. The discount column, as we established, is just for a memorandum purpose. It's just for a tally. It is used for listing all of the monies that you're actually allowing to your customers. So you'd find that on the debit side of the cash book. On the credit side, what you will actually see on the credit side is very similar information. So a date column. You will also see on the debit side cash and bank. And you'll also see the discounts column. So you can see the discount received column here. The discount received column actually is just a tally as well. Okay. So there's nothing else. So there's nothing that you'd actually put in this column in terms of a debit and a credit. So it's not a direct debit and credit. So the discount allowed column is not a direct debit of the discount received column. Okay. It is just really to help you to identify what is happening. So that's discount allowed here. That is just a tally. Discount received is just a tally. But these are not direct debits and credits. You might be wondering, why am I repeating that so much? It's because students tend to make the error of thinking that these are direct debits and credits. Okay, so this brings the end of this first video that actually explains the cash book, the layout of the cash book, the purposes for which the cash book is prepared, and just giving you an insight into some of the types of transactions that you will find in the cash book.